Okay, so very good morning. I hope yesterday we started chapter 3, right? So just I will revise once again. Just one understanding point we learned definition of financial management and objectives of financial management. So even though we have a lot of objectives, even though we have a lot of definitions, we understand with basic version of definition. Financial management is nothing but managing money. Now when it comes to objectives of financial management, two objectives are there: profit maximization, wealth maximization. I said difference between profit maximization and wealth maximization. The common sense, if I invest 1 rupee, if I receive 0.1 paise as a interest or a profit, that is called profit maximization. If I invest 1 rupee, my 1 rupee doubles or into 3 times or into 4 times. That is called wealth maximization, capital appropriation. Not appropriation, appreciation. Clear now? Then fine. Next, profit maximization is a traditional outdated concept. Wealth maximization is a modern concept. That's why this is the main criteria we are learning financial management for company purpose. In every company need to maximize their company wealth. The reason that is not a owner fund, it is a public fund. Why? Because they are procuring money with help of equity shares now. If it is only my capital, my company, my capital, there is no concept of wealth maximization. But in my company, lot of persons are invested. Debenture holders are invested, bankers are invested, public are invested. I need to increase their value. The increasing value of the fund is nothing but wealth maximization. How it will be increased, ma? If company take a two best decisions, automatically wealth will be what happen? Increases. That is called maximization. What are the two decisions, ma? Financial decision, investment decision. If these two decisions are good, automatically we will discuss about the dividend decision. Out of these two, any one is fails. There is no concept of dividend decision. Guys, clear now? Now, what is the mean for financial decision, ma? What is the mean for financial decision? Procurement of money. What is meant by procurement? Collection of money. So, if you want to start a company, if you have a own capital, no problem. If you don't have a capital but you have idea, then you need to procure capital also. That is called procurement of funds. That is a financial decision. What is meant by investment decision, ma? What are the money we procured? We need to use for business. Usage of money is nothing but investment decision. We are not using the word called usage. We are using a word called utilization. Are you okay now? Then fine. So next, dividend decision. If company earns profit, company will decide, shall we share the profit to all owners or not? That is called dividend decision. When it will come, if there is a profits. If there is a no profit, there is no discussion of dividend decision. Now, if you want to take a best financial decision, you have to learn 3 chapters. Cost of capital, capital structure, leverage. If you want to take a best investment decision, you have to learn capital budgeting, working capital, management. So what is the mean for capital budgeting? Means amount investing on long-term assets. Land and building, factory, plant and machinery, furniture. Without all those, we can't start the business, na? So if money using for purchasing of long-term assets, that is known as a capital budgeting. Thus, some amount of money we are using for short-term assets, that is called working capital management. Clear now? So if you want to learn this capital budgeting, you need to learn another 2 concept name called time value of money, risk and return. After completion of all these cost of capital, capital structure, leverage, time value of money, risk and return, capital budgeting, working capital, you have to report the statement to your higher authority. The reporting statement is known as what, ma? Ratio analysis. Now authority asking, I don't want accrual concept, I want only cash related concept. The cash related concept is nothing but received transactions, paid transaction. For that we need to prepare another statement name called cash flow statement. Okay now? Now after that, again higher authority asking, we have procured 100 crore rupees. For that 100 crore rupees I want transaction. Where you utilized, where you procured. That is called capital statement, technically known as funds flow statement. Are you okay? These are the chapter list also. Clear now? Next, we started chapter 3 first, right? Cost of capital. What is the purpose of cost of capital, ma? What is the purpose? What is the purpose? Sir, if you're procuring money from the outside, we have multiple sources. Out of that multiple sources, where I will get least cost. In simple terms, where I get least interest. That is the purpose we are learning concept name called what ma? Cost of capital. Now see this example to understand the purpose. So this is my company. I procured 1 lakh rupees from Ramesh. Are you clear? At the date of 22nd December 2025. After 1 year, I repaid 1,40,000. Now out of 1,40,000 breakdown, 1 lakh is a capital, 40,000 is a expectation of the Ramesh, cost of DQ. Expectation of a Ramesh. Why? Because no one can give money for free of cost. Ma. They will expect something. Na? The something is nothing but cost of capital. Now the 40,000 is nothing but something. Now here 1 lakh is not our discussion, 40,000 is our discussion. That is nothing but in simple terms interest. In company point of view, cost of capital. We are paying money for capital, cost of capital. Clear na? Then fine. Next, I said calculation part also. In this transaction, two kind of transactions is there. Ramesh point of view transaction, DQ point of view transaction. You need to learn on receiver point of view only, not paid point of view. So that means when it comes to who is the receiver here? DQ. Are you guys clear now? So DQ point of view, how much percentage they paid means how you say ma? Extra. You can, I will give a common sense logic. If you want to calculate percentage, new minus old divided by old into 100. New value minus old value divided by old value into 100. That is a common sense logic for percentage calculation. What is the new value? 1,40,000. What is the old value? 1 lakh. Now 1,40,000 minus old value 1 lakh divided by old value 1 lakh. 40% I paid extra. Na? This is known as cost of capital in percentage format. Rupees point of view, I can say directly 40,000. Now cost of capital can be expressed in two ways, rupees point of view as well as percentage point of view. Next, that is a company point of view. You have to think like that only. You have to think in cost point of view only. But when it comes to the Ramesh point of view, it is a profit. It is a benefit received. That's why on that point, cost of capital is not a right word. Return on investment is a right word. But return on investment is it's not our discussion. What is our discussion? Cost of capital. Clear now? Okay, then fine. So this example I said, we have a multiple sources in the market, but for exam purpose and knowledge purpose, they provided 5 sources. What are the 5 sources? Ma? Company can take money from public with help of issue of ownership, that is nothing but equity shares. Company can procure money from public with help of issue of preference shares. Company can procure money from public with help of issue of debentures. Company can procure money from bank with help of mortgage. Company can use their already existing profits, that is called retained earnings. Are you clear now? For every fund, the person is involved now. The person will not give for free of cost. He will expect something. That is our calculation. In equity share capital point of view, what is the expectation? Ma? Equity dividend is the expectation for investor. But we are company, na? We are company, we are procured. Our point of view, equity dividend is not income. Our point of view, it is a cost of equity share capital. It is denoted with what, ma? KE. Same logic for preference share capital. The person who invested in company with help of purchasing of preference shares, they are expecting preference dividend. In my point of view, it is a cost to me. That's why cost of preference share capital, KP. The person who invested in debenture, the expectation is interest, cost of debenture, denoted with KD. So, bank, mortgage, expectation is there or not, ma? For bank, they will give free of cost. No, they will expect something that is called what, ma? Interest. Professionally, I is saying that cost of bank loan or term loan. Here, what is the capital? Bank loan or term loan is a capital. For capital, I am paying extra amount, that is called cost. Cost of bank loan or term loan. Now, when it comes to retained earnings, sir, retained earnings are company profits, na? For company profits, there is no expectation. Then why you recorded here? Sir, it is a company profit, sir. But who had a right on that company profits? Owners. Ever go to the right? Owners. had a right na. If I am a single owner, I have a right. Me and Malavika, right? Madhulika, right? So Madhulika has a owners now. Now profit have who's, for this 20 crore rupees of profit, who had a right? Me as well as Madhulika. But when it come to the company point of view, they are selling 1 lakh shares for 1 lakh people. The meaning of 1 lakh people is 1 lakh people are owners. Even if you have a 1 share in the company, you are owner of the company. Clear na? So that's why this 20 crore has a right of owners. That's why they are also expecting something. So owner expectation I already said here. Equity dividend. That's why that here also that will be reflected. Cost of equity. Cost of equity. No. What are the capital I used here? Retained earnings. That's why cost of retained earnings. Or cost of reserves and surpluses. Guys, clear? Next. So this is a common sense point I said. Here KE, KP, KD, KT, KR are the what ma? Specific cost of capital. At the end of the year, I don't want a specific cost of capital. At the end of the year, I need to express total point of view. So as per my max knowledge, total means sum of individuals. Yes or no? Na? But if you sum of individuals, if you sum all this specific cost of capital, is not a logical to understand. Why? Because this is the example, 48%. What is the meaning for 48%? At the end of the year 1, I need to pay 48% as a cost. Practically possible? No. That's why I am not using individual summation. I am using weighted summation. Then if you apply weights, you will get 12%. Now what is the meaning for 12%? Ma? At the end of the year, I have to pay 12% as a cost of capital. For whom? For equity shareholder, for preference shareholder, for a debenture holder, for banker, for retaining earnings. Nothing but equity shareholders. This is the right version. How you get this 12% means if you multiply with weights, K into weight, KP into weight, KD into weight, KT into weight, you will get KO. That is called weighted average cost of capital. I think these are the discussion happening in yesterday class. Yes or no? No? Okay, then fine. Next. So only 2 types of problems is there in our material and as per exam standard also. Concept A, calculation of specific cost of capital. That is nothing but KE individual calculation, KP individual calculation, KD individual calculation, KT individual calculation, KR individual calculation. When it comes to the concept B, calculation of weighted average cost of capital is also be known as overall cost of capital. Is also be known as just cost of capital. Clear? Okay, then fine. Now concept number 1, I started cost of debenture, KD calculation. When it comes to debenture, as per law, as per practicality, there is a lot of classification. Redeemable debenture, irredeemable debenture, convertible debenture, non-convertible debenture, that kind of classification is there. But when it comes to our cost, FM point of view, they consider only redeemable debenture, irredeemable debenture. You need not worry about remaining things. Redeemable, irredeemable. Now what is the meaning for irredeemable debenture? What is the meaning for redeemable debenture? Ma? Irredeemable debenture means what? Redeemable debenture means what? Sir, first 2 or 3 classes only I will say in cool manner. After that I will show my attitude. You will not answer properly. Clear? If I ask a question, please tell me the answers. If you want to tell the answers, you need to refer first. I said yesterday class only. I will ask questions. Don't neglect. Now when it comes to what is a irredeemable debenture? What is a redeemable debenture? Ma? At the time of entering into the document of debenture, if they quote like this, we will pay interest for lifelong. We will not repay your capital. That is called what? Ma? Irredeemable debenture. At the time of entering into the agreement document, they says like this, we will pay interest for 10 years. At the end of the 10th year, I will repay capital also. So N is not a fixed one. Ma. It will be vary from the organization to organization. Some organization will give 5 years. Some organization will give 15 years. But N is very, very important. If N is there, what is the meaning of that N? They will pay every year interest for N number of years. Up to 15 years, every year they will pay interest. At the end of the 15th year, they will pay your capital also. That is called what? Ma? Redeemable debenture. Clear? Now see, ma. So I said two accounting terminology: revenue expenditure, capital expenditure. What is the meaning for revenue expenditure and capital expenditure? Within 1 year related expenditure or product related expenditure, revenue expenditure. More than 1 year related asset expenditure or capital expenditure. So capital repayment is also be known as capital expenditure only, no? Now so when it come to irredeemable, you will paying only interest for lifelong. There is no discussion of capital. That's why revenue expenditure only they will consider here. But when you come to here, what are the payments you are doing, ma? For every year interest you are paying, at the end of the nth year, capital also. Here two transactions are involved. Revenue expenditure is there, capital expenditure is there. Clear? So generally first I will give basic version. How to calculate interest, ma? How to calculate interest percentage? Amount of interest divided by investment. Amount of interest divided by interest. If you want percentage, you have to multiply with 100. Now see, ma, as per our example, what is the amount of interest I paid, ma? Divided by investment, ma? Instead of investment, can I use a word called capital? Capital. Yes or no, na? Why? Company point of view, that 1 lakh is capital. Ramesh point of view, that 1 lakh is a investment. So whom point of view you are calculating? Company point of view. That's why I'm taking capital. But when come to the value point of view, both are same only. Don't confuse with help of the investment or capital. Both are same only. Now 1 lakh into 100. That equals to 40%. Are you okay? Now, here any securities are involved, ma? Here any securities are involved? No. Just one promissory note or agreement is there in between me and Ramesh. Are you clear? But what's the topic it is? Debenture, na? Debenture means number of securities will be there. Number of security. Now I will explain what is the difference between that. Face value over par value. In my books of accounts, one debenture equals to 1000 rupees. One debenture equals to 1000 rupees. I sold 500 debentures. I sold how many debenture? 500 debenture. Now what is my capital? Company point of view, what is the capital? Sale only capital, na? If I sell only, I will receive money. That is nothing but procurement of money. Now how many debentures you are selling, ma? 500 debentures you are selling. Can I name it as called 500 is capital? No, they are securities. The number of securities equals to 500. How you get capital? Security into security value. What is the security value? 1000. Now what is the investment or capital, ma? $500 debentures, that is nothing but 500 securities into value per security, value per debenture. Now 500 debentures into 1000 rupees each. Now what about the capital? What, ma? Are you clear? The purpose of this explanation, you can calculate interest rate on basis of one security, as well as you can calculate interest rate on basis of total value. Are you clear? With help of 5 lakhs also we can calculate. With help of this 1000 rupees also we can calculate. Are you okay? Yes or no, na? Okay. Now see, interest rate equals to 12%. Interest rate equals to 12%. Are you okay? Now, what are the rate they given in the question paper? It is not a KD. It's a specified rate. Why it is not a KD? I will explain clearly. Now, I need to calculate interest percentage now. Total point of view. How you get interest, ma? How you get interest? Capital into 12%, you will get interest amount. I want interest amount. How you get interest amount? Percentage 12%, capital amount 5 lakhs. Now, amount of interest divided by capital. That only your formula, na? Now, how we get amount of interest? In example, I said 40,000 rupees. Here, I am not explained the amount of interest, but the clue is there. What is the clue? Percentage. Now, 12% of 5 lakhs divided by what is the capital, ma? Answer? Use calculators. What, ma? 60,000 divided by 5 lakhs. Again, it will come only that percentage only, na? This is a one version to calculate interest rate. Okay. Next, another rate, another version, ma. Interest percentage equals to percentage on face value divided by face value. Net proceeds, ma. Net proceeds. The word net proceeds nothing but selling price. For one security, what price you sold, ma? 1,000 rupees. Apply 12% on 1,000. What about the net proceeds? 1,000. Answer? Here, the purpose of explanation, you can calculate percentage on total point of view as well as per unit point of view or per security point of view. Are you okay? Now, let us explain the meaning of net proceeds now. Net proceeds means per security how much you sold. Net proceeds means what, ma? Per security, what the value you sold. For example, as per your books of accounts, what is the per security value? 1,000. I sold 1 lakh securities in the market. No one showing interest, ma. No one showing interest to purchase. Then I want money now. What is the next action? I need to reduce my security price. Can I name it as called discount, ma? Can I name it as called discount? For 1,000 rupees, no one is not showing interest to purchase my debentures. Now I reduced 50 rupees. I reduced 50 rupees. Now what is my debenture value? I sold for 950 rupees. Net proceeds 950. What are the 1,000 rupees is there now? Face value. I want now tell me, I need to consider face value or a received value. What is the received value? Net proceeds. The received value is known as what, ma? Net proceeds. Okay, ma. Already I sold 1 lakh debentures, ma. Now eagerly waiting. Lot of people are eagerly waiting. I have my company had a lot of goodwill. We are paying interest within time. We will pay bonuses, etc. That kind of things is there in the market. At that time, can I increase my debenture value? Now my books of accounts I am showing 1,000 rupees, but in market I am selling for 1,200 rupees. How much you will receive for hand, ma? How much you will receive? 1,000 rupees or 1,200? 1,200. Now 1,000 rupees is known as face value. 1,200 is known as received value. Technically net proceeds. Now tell me, for calculation purpose, what you consider? Face value or net proceeds? Net proceeds. Ma, I sold for 1,000 rupees only, ma. My books of accounts I recorded 1,000 rupees. Public also purchased for 1,000 rupees. Now what is the net proceeds, ma? What is the face value, ma? Clear? So net proceeds means not only face value, sometimes face value minus discount. Sometimes face value plus premium. What are the 200 I added? That is called what, ma? Premium. Sir, there is no discussion in the question paper, sir. There is no discussion. Discount related discussion is not there. Premium related discussion is not there. What is the net proceeds? Face value. Clear? Hope you understand the meaning of net proceeds, ma. Are you okay? Okay. Another statement you have to learn, ma. If all are group 1 completed, group 1 coaching completed, huh? No, no. Okay, then fine. So I will tell, ma. This is a statement you have to understand for this calculation purpose. Sales. First, we have to pay variable cost, ma. Material, labor, overhead. Direct expenses, that is nothing but variable overhead. That is the expenses you have to mandatorily incur. If you are not paying that, then you need to shut down your business. Clear? First, you have to recover what, ma? Variable cost. Now, the sales is 1 lakh, ma. Variable cost 45,000. Are you recovered or not, ma? Yes, you recovered. You want 45,000 for variable cost, but you generated 1 lakh rupees. Now the pending amount is there, na, ma? 55,000. Na? This is called variable profit, ma. The name is variable profit. Why? Because already you record variable cost. After recovery of variable cost, what are the amount you get? That is called variable profit. But there is a professional terminology, contribution. Contribution. Now what is the name for this 55,000? Contribution. Now out of that contribution, you have to remove your fixed cost. That fixed cost also relating to your product only, your production only, your operations only. Now please tell me give me the list of fixed cost, ma. Salary, rent, depreciation, insurance. These are commonly we are using. Yes or no? Interest fixed cost or not, ma? Why fixed cost? Irrespective of profits, you have to pay. You can generate sales or not to be generate sales. You have to pay interest. If output increase or decrease, fixed cost remains. Interest definition, that only, na? Yes or no? Now why I am explaining this means, this is our discussion. Are you okay? Ma, why you are increasing salary, ma? Why you are increasing salary? Sir, salary I am using for admin department, sir. If there is no admin department, production department and selling department is waste. Without employee, we can't run the business. I am not talking about the labor, employees, admin department people. They are only taking departmental decisions, na? For that purpose only we are paying salaries. Now, can I name it is called relating to production? Salary relating to the production. Without them, product will not produce, ma. Yes or no, na? Good related. Rent, why you are paying, ma? Building. If there is no building, there is no good. That's why rent also be related to what, ma? Good. What is the purpose of depreciation, ma? Plant and machinery. If there is no plant and machinery, there is no manufacturing. Can I name it is called good related expenses? Now what about the insurance, ma? Stock of insurance is there, profit on insurance is there, but both are relating to product only, na? Good related. Now what about the interest, ma? Good related, huh? It relating to finance. It relating to capital. It relating to what, ma? Capital. For capital I need to repay, for the purpose of good. If there is no interest, there is no discussion of stopping of production. Hope you understand. So this is not relating to good, it relating to the capital. Hope you guys clear. Now this is called operating fixed cost. That is called what, ma? Operating. What is operation? Day-to-day activity. What is your day-to-day activity? Manufacturing of a good. Now this interest is there, na? That is called finance fixed cost. Finance fixed cost. You have to understand this first. Operating fixed cost is there. Financing fixed cost is there. What is the difference between operating fixed cost and finance fixed cost? If fixed cost relating to good, operating fixed cost. If fixed cost relating to capital, that is called finance fixed cost. Clear? Are you okay now? Then fine. Now out of that contribution you have to remove fixed cost. What fixed cost? Only operating fixed cost first. Operating fixed cost. Remove that good related fixed cost. Operating fixed cost. Sir, operating fixed cost includes interest or excludes interest? Excludes interest. Interest I not paid now. I will remove what? Only operating related fixed cost. That is the first criteria. We have to repay. Now I reduced 20,000 rupees. 20,000 rupees. Even though I repaid operating fixed cost, I have money. How much, ma? 35,000. This 35,000 name is EBIT. EBIT. Earning before interest and tax. Earning before interest and tax. Now you can also use a name called PBIT. Profit before interest tax. Just a terminology differences. That is, no, there is no proper differences. Just a terminology difference. EBIT, PBIT. Name only difference, ma. Okay. This is also be known as business profit, ma. This is also be known as business profit. This is also be known as operating profit. This is also be known as operating profit. You can observe above, we removed only operating related. After payment of all operating related, I will get a profit that is called operating profit. Costing, in your costing, you stop it to here, ma. But you are not using a name called EBIT, business profit or operating profit. You just simply use a name called profit. But the real name for that profit is earning before interest and tax, or profit before tax. Sorry, business profit or operating profit. Instead of that technical terminology, you just using a name called profit. Are you okay? Up to here, costing completed. Now FM starts. Are you okay now? Now what is the FM? See, ma, what is the full form for EBIT, ma? Earning before interest and tax. It means first you have to repay what, ma? Interest. You have to repay interest. Now interest amount 10,000, ma. Interest amount 10,000. It means out of that EBIT you paid interest. Now what is the amount in your hand, ma? 20. Now name for this 25,000, ma, EBT, ma. Earning before tax. Earning before tax. Clear? Now earning before what, ma? Tax. Now you have to pay tax. Is it mandatory, ma? That is PGPB said. If you are an enterpriser, you are the hidden partner to the government. Why? Because government providing infrastructure, electricity, roads, bridges, police services. For that purpose only you have to pay tax. Are you clear now? If you have a profits, what profits? EBIT or EBT? Not EBIT, only EBT. If EBT is 0, no tax. That is your calculation in PGPP. Tax payable profit is there, na? The tax payable profit is nothing but what, ma? EBT. Earning before tax is also be known as taxable profit. Is also be known as taxable profit. Now, as per PGBP, we assuming 30% is the tax rate. You have to pay, na? Minus tax at the rate of 30%. 30% on which value, ma? Sale value, contribution. I know 30% on profit only. Now I have multiple profits. Contribution is a profit. EBIT is a profit. EBT is a profit. On which profit I need to apply the 30%? On taxable profit. Which one is the taxable profit? EBT is the taxable profit. Sir, if EBT is negative, no tax. Sir, if EBT is 0, no tax. If EBT is positive, tax. Clear, huh? Now 30% on 25,000. What, ma? 7,500. Even I paid tax, ma. Amount in my hand, how much, ma? 17,000. Ma, this is called EAT, ma. earning after tax. Earning after tax. Now here you have to check one thing ma. Your company have preference share capital or not? Why? Because at the time of entering into the preference share capital agreement, I said one point. What the point? You are not a owner to my company. I will treat like a your owner. I will give one benefit. Before sharing to the owner, I will give importance to you. Are you clear now? It means this is called owner's profit. Generally, this is also been known as per your accounts net profit ma. PAT is also been known as net profit. Now net profit can shared by owners only na? Yes or no? But if there is a preference share capital, you already promised. I will pay first to you, next to my remaining partners. Yes or no? Now we have to remove preference dividend. Sir, if there is no preference share capital, you need not to pay preference dividend. Entire that profit you can share. Clear? So again I will explain this one. Don't worry. For example, preference dividend 10,000 rupees ma. Remove it. 7,500 pending. That is called EA/ESH ma. EA/ESH. Earning available for equity shareholder. Who is the equity shareholder? Owner. Now can I name it is called owner's profit? This is a statement you have to learn first. Are you okay now? Now just forget about the entire table. Learn up to here. Learn up to here. Now the purpose is ma, is it mandatory to reduce interest first ma? My question, sir, I will pay tax first, then I will reduce interest next. Is it right or wrong? Why? Why? Income Tax Act says that interest is a burden to the company. You have a tax advantage. You have a tax advantage. What is the tax advantage? Before payment of tax, you can remove. If interest removes, your profit will increase or decrease ma? Interest removes, your profit will be increase or decrease? Decreases. If a profit decreases, you are paying high tax or low tax? That is called advantage. That is called advantage. Now see, you will get clarity. 35,000 only na business profit. Example, I am not removed interest. Now what about the EBT? Now tax you have to pay on how much? Antama? 10,500. Now what about the EAT? 24,500. Now observe the difference, you will get clarity. If you not remove interest before payment of tax, you have to pay more taxes. That's why you have a tax advantage. What is the tax advantage? You can remove interest, you can remove tax on your interest. Are you clear now? Now see ma. KD calculation ma. Pre-tax concept is there. Post-tax concept is there ma. In every problem you have to focus on post-tax only. Are you okay? Now KD, cost of debenture, equals to interest divided by net proceeds into 100. I am saying in not total point of view, I am saying in per security point of view. How to calculate interest? How to calculate interest? Percentage on face value always. Percentage on face value. Now what is the meaning for net proceeds? What is the meaning for net proceeds? face value minus discount. If you're selling at discount, ORR, face value minus, sorry, not minus, plus premium. When if you're selling at, premium. Clear? Next ma. When it come to post tax ma. Interest 1 minus tax divided by net proceeds. Divided by net proceeds. What is the meaning for 1 minus tax ma? What is the meaning for 1 minus tax? Tax advantage. For example, interest is 10 rupees ma per security. Tax rate as per previous example 30%. Now what is that calculation ma? 10 into 70% or 10 into 100%? 10 into 100% or 10 into 30%? Interest I calculated 10 rupees ra. 1 minus what about the tax rate? Now rupee, that's why I am consider rate. If it is 100, I will consider 30%. Because of 1 rupee, I will consider 1 rupee related. 30% is related to 1 rupee means rate only na 0.3 divided by 120. Now you will get a clarity. Now tell me, are you paying 10 rupees or 10 into 100% or 10 into 30% or 10 into 70%? 70%. It means you are removing 30%. That is called what ma? Tax advantage. Interest 1 minus tax. Why interest 1 minus tax? Interest is a burden to the company. You can take tax advantage. The advantage calculation is nothing but what? Interest 1 minus tax. Clear? Are you guys clear? This is about irredeemable debenture calculation. KD equals to interest 1 minus tax divided by investment. Total point of view. If you are a per debenture point of view, per debenture sale value, that is nothing but net proceeds. Ma, in question paper, they not said about the face value. They not said about the discount value. They not said about the premium value. At that time, ma, assumption is there, ma. You can take an assumption with a face value is like this. 1000, 100, 10, what are the value you want, you can take an assumption. Are you okay? But you have to mention in down note point. Are you okay? Apart from that, sometime they will give market price ma. I said I think yesterday class difference between face value and market price. At that time what we need to do means, as in institute says that if net proceeds, market price both are there, you have to consider market price. You have to consider market price. If there is only market price, common sense, market price only. If there is only net proceeds, net proceeds. Now the point is net proceeds are market price. Net proceeds are market price. If both is there, market price. That is a clear-cut concept. Are you okay now? Clear? Shall we solve the problem? Wait for 2 days ma, I will give materials. Materials already readily there, but cover pages are on cover pages, faculty are working ma. Team is working, that's why delay. Up to now no problem. Materials are already ready. You can observe the problem illustration number 1. What is the meaning for pre-tax and post-tax ma? Without tax benefit, pre-tax. With tax benefit, apply your common sense ma. Pre-tax rate will be more or post-tax rate will be more ma? Pre-tax rate will be more or post-tax rate will be more? Pre-tax ma. Why? Because you are not removing tax. When it comes to the post-tax, you are removing tax. That's why rate also reduces comparing to pre-tax. That kind of discussion needed ma. Now read the question first. x limited as a 10%. 10%. So first you have to decide if you want to calculate KD. In your mind you have to revise two things. First you have to check it is redeemable or irredeemable. Now tell me, redeemable or irredeemable? Why? What is the meaning for perpetual? Lifelong they will give only interest. Are you guys clear now? Then can I start the calculation part? Okay. The tax rate is 35%. Determine the cost of capital before tax as well after tax, assuming that debt is issued at par, 10% discount, 10% premium. What is these three cases, ma? If what is the mean for par? What is the meaning for par? Face value. Okay. Now, par is there a par or face value per debenture? Par or face value per debenture is there or not? In question not there, but you can calculate in total point of view. Or second alternative, you can take assumption also. What is the assumption? Par equals to 100 rupees. Par equals to 100 rupees. Two are possible. Are you okay? I think if you consider 100 rupees, answers also you will get same like that only. Per security point of view. So I will solve per security point of, per debenture point of view as well as total point of view. Now first you have to understand how many cases is there? 3 cases. What about the case 1? Par. For this you have to figure out pre-tax, post-tax. Case 2. What ma? 10% discount. Pre-tax, post-tax. Case 3 ma? 10% premium. Here also you have to figure out pre-tax, post-tax. This is the blueprint for that problem. Shall we? Problem number 1. Case 1. Calculation of cost of debt if issued at par. For one case 1 only I will solve in two prospectus. For remaining all I will go with the total only. Total point of view, per debenture point of view. Total point of view. Just for understanding purpose only ma. For every problem we need not to solve like this. We will use only per debenture calculation only. Are you okay? Now pre-tax, post-tax. What about the pre-tax calculation? KD equals to interest divided by net proceeds or market price. I think market price is not there. That's why I am not using market price. I am using only net proceeds. What about the post-tax calculation point ma? Interest 1 minus tax divided by net proceeds. Now when it come to I equals to interest, 10% interest rate on 1 lakh. Investment only now. 10% of 1 lakh That is nothing but 10,000. Yes, numerator is there, 10,000. What about the net proceeds, ma? Face value only, na? Par. Are you okay? What is the book capital? 1 lakh only. Net proceeds equals to par, that equals to capital in the books of accounts, 1 lakh. Answer, ma? 10,000 divided by 1 lakh, 10%. Now when it come to pre-tax, ma, this is the exam point of view needed. How to calculate this one, ma? Same interest 10,000 only, na? Into 1 minus tax. What is the tax, ma? 35%, but we are considering rate. What is the rate? 35 divided by 100, that is nothing but 0.35. 0.35. Divided by net proceeds is nothing but same only, na? Book value of investment or book value of capital. Answer, ma? That's the point I asked, ma. Pre-tax rate is more or post-tax rate is more? Pre-tax. Why? Because there is a no tax advantage. In post-tax, there is a tax advantage. That's where rate will be reduces. Are you okay now? Now when it come to per unit point of view, per debenture point of view, pre-tax, post-tax. Answer will not change much. Same only came. So I am applying direct formulas. How much, ma? 10%, huh? Here. If you not multiply with 100, you will get rate only. If you multiply with 100, you will get percentage. That's it. Don't confuse on rate and percentage. If you multiply with 100, you will get percentage. If not multiply with 100, if you calculate it, you will get rate. Both are same only. So instead of 6.5%, you will get an answer 0.065. Clear? Huh? 6.5%. Now what is the assumption I taken here? Face value equals to 100. Now how to calculate interest, ma? 10% of face value. Now 10% of 100, how much? That only I recorded here. Now what is the net proceeds, ma? Face value. I am calculating per debenture point of view only, now. Not there in information, I take an assumption 100. Are you okay now? Now the understandable thing is pre-tax and post-tax, common sense. When it come to this total point of pre-tax, post-tax is a subject. Total and per debenture is a common sense. Are you okay now? So what about the next one, ma? %10 discount. Pre-tax, post-tax. $10,000 only, na? Interest 10,000 only, na? 10% of capital. When it come to net proceeds, now first I will calculate IMA. I am not writing formula. I divide by NP only, na? I how? 10% of capital, total point of view. What is the capital? 1 lakh. How much? 10,000. Now what about the net proceeds, ma? Face value minus 10% of face value. Now what is the face value? 1 lakh minus 10% of 1 lakh. Answer? That is called net proceeds. Now what is the percentage, ma? 11. Please come to the post tax, ma. Interest, how to calculate, ma? 10% of face value, ma. Face value is book value, nothing but total, na. 10,000. There is no change. What about the here? T is there, I think. 0.35, T. As per formula, I am writing each and everything. I think we missed here. T represent tax. That is nothing but 0.35. Next, what do you want, ma? Net proceeds, 90,000 only, now. Now, insert in the formula. 10,000 into 1 minus 0.35 divided by 90,000. Answer? 7 point. Are you okay? Now you can compare with, if you compare with horizontally, that is a comparison of pre-tax and post-tax. If you compare with vertically, that is called par and discount. Now compare with the post-tax vertically, 7.22%, 6.5%. If you are issued at par, you need to pay less interest. If you issued at a discount, you have to pay more interest, even though you have a tax advantage. Guys, clear na? There is a vertical comparison and a horizontal comparison. Next, case 3, 10% premium. What is the I calculation, 10% of 1 lakh, there is nothing but 10,000. NP, face value plus 10% of face value, that is nothing but premium. Now 1 lakh 10,000, now insert in the formula. 10,000 divided by 1 lakh 10,000 into 100. 9 point. When it come to here, I want I. I is nothing but 10% of face value, 10,000 rupees amount of interest. Next I want T, order, I1 minus tax, T, 0.35. Next I want net proceeds information. Same only, na? Face value plus 10% of face value, 1 lakh 10,000. Now insert in the formula, KD equals to 10,000 into 1 minus 0.35 by 1 lakh 10,000. Answer, 5 point. If you sell at premium, you can pay less interest comparing to discount, comparing to face value. R is nothing but face value. Vertical comparison. You can know the common sense we apply. Horizontally, always pre-tax is more rate, post-tax is less rate. Hope you guys clear? In this entire problem, you have to learn this one only, post-tax. How to calculate post-tax? Interest 1 minus tax divided by net proceeds or market price. Net proceeds or market price. Clear? Next, second thing you have to learn in this problem, we can issue at par, we can issue at discount, we can issue at premium. You can start the notes. Irredeemable, okay? There is another concept, redeemable also is there. In exam, 99% they will touch redeemable only. Redeemable also bacha thing, Where we are? Here, huh? Don't write like this. Put a heading. I hope you understand, huh? And their examples. Don't dump that examples. Just write down. Calculation of cost of debenture, KD. Wait. Calculation of cost of irredeemable debenture. Calculation of cost of irredeemable debenture. Calculation of cost of irredeemable debenture. Are you okay? Then fine. Split into 2 points. What are the 2 points? Pre-tax, post-tax. Pre-tax, post-tax. What is the meaning for pre-tax? No tax advantage. Pre-tax down arrow mark. No tax advantage. What is the post-tax? Tax advantage. Tell me, as a company owner, do you want advantage or not? Yes or no? That's why what is important one? Post-tax. Are you okay? Now pre-tax down arrow mark, write down the formula. What's the formula? KD equals to interest divided by net proceeds or market price. Interest divided by net proceeds or market price. Next, when it come to post tax, KD equals to interest 1 minus tax divided by net proceeds or market price. Completed? In center between the two, in center write down I equals to what? Interest. Write down full forms. I equals to interest. I equals to interest. That equals to calculation part. What is the calculation part? Percentage on face value. Always, not on net proceeds. Always percentage on face value. That face value may be total value or per debenture value. That's the explanation I explained in KCA. Face value means what? You can consider total 1 lakh or you can take 100 rupees also. Are you okay? Don't write that. Next, T represent tax rate. T equals to tax rate. That equals to, in bracket, use the word given. So we can't calculate, they will give. If they not give tax rate, which formula is suitable? Pre-tax. If there is a tax rate only, there is a discussion of post-tax. If there is no tax rate, pre-tax. Clear? Next, net proceeds equals to face value minus discount minus flotation cost I will explain what is the meaning of flotation cost. In down also minus flotation cost. Now here apply wrong mark, ra. Why? Because as per law it is amendment, ra. This generally not here, here, ra. Debentures need not to issue a discount. Okay, but in questions is there, you have to consider. Why? Because it's not a law, it is a FM. Okay, now let us discuss about the flotation cost. In bracket, if you want, give write down underwriting commission. Flotation cost, in bracket you can use a word called underwriting commission. Underwriting commission. Now what is the underwriting commission, ra? I announced my company debentures are sold in the market. No one showing interest. At that time, I will approach one person. His name is underwriter. They will charge 2.5% or 5% for debenture. Very, very important percentages. For equity shares, I hope they will consider 2.5%. For debenture, they will charge 5%. Guys, clear? Okay. Now, common sense. The face value is 1000 rupees. I issued at, how much I said, ma? 1000, huh? I issued at 900. I issued at 900. How much I will receive, ma? 1000 or 900? 900. But 900 also, no one showing interest. I appointed an underwriter. He will charging 50 rupees. Now how much I will receive net? 1900 or 850? 850. Why? Face value 1000, discount 100, flotation cost 50 rupees. Net how much I receive? That is called net proceeds. That is called net proceeds. Guys, clear? Now when come to the second case, face value 1000, I sold for 200 extra. Now how much the issue price? How much the issue price? I issued at 1200. I will collect also 1200 only. But no one showing interest in the public. At that time I appointed a underwriter. Now they will charging 50 rupees per debenture. Per debenture sale value issue price is 1200. But I need to pay underwriting commission 50. How much I will receive? 1150. That is called net proceeds. Guys, clear? Now are you understand the point of flotation cost? That's it. Now you can start the solution. When it comes to per debenture, use the bracket in bracket use alternative only. percentage of discount in which what value you are applying, right? Percentage of discount is given. How to calculate discount value? Yes, percentage on face value. Percentage of premium is given. How to get that premium value? Percentage on face value. Flotation, I said in example, flotation cost is a value, right? If they give flotation cost percentage, there is a conflict between CMA and CR. In few problems, they consider on percentage on face value. In some problems, they consider percentage on issue price. What does it mean for issue price? Face value plus premium or minus discount. That is called issue price. Clear? Okay. Now that part also you have to highlight. Discount value equals to percentage on face value. Premium value equals to percentage on face value. Flotation cost value equals to percentage on face value. Interest? Interest? Percentage on face value only. Common sense, if you take numerator as a total value, denominator also you have to consider total. In numerator, if you consider per debenture value, in denominator also you have to consider per debenture value. That's it. Completed, huh? Completed, case 2. So ultimately you have to learn calculation part as well as that points is there now, how to calculate interest, how to calculate net proceeds, how to calculate tax. That are the things you have to learn in this concept. That's it. Just understand the examples, don't by heart. So that the income statement, all those things for explanation purpose only I explained. Clear? The same thing, for example, few classes we will discuss 2 hours continuously, but for exam point of view learning only 1 or 2 points. In this point, exam point of view learning only calculation part. Clear? If you refer that, that is sufficient. That is a preparation. Clear? Okay, completed. Then fine. The points you have to add here. Discount value equals to percentage on face value. Premium value equals to percentage on face value. Flotation cost, if they give percentage. If they give value, directly you can remove. If they give percentage, percentage on face value. So in our book only, in one problem, we apply that percentage on issue price. Now ultimately, in simple format, net proceeds equals to, can I write like this? Issue price minus flotation cost. What is the issue price? You can issue at par, you can issue at discount, you can issue at premium. Are you okay? So market price they will give. Market price they will give. We can't calculate the market price. Next the point instead of MP, sometimes they will give P naught MP or P naught. Both convey same meaning only. What? Market price. Okay. Next. Just observe the formula What is the difference between pre-tax and post-tax Tax advantage only In exams, there is a no discussion of pre-tax Just the first problem only. There is a difference between pre-tax and post-tax related calculation. Remaining always they will touch this post-tax concept only. But explanation purpose, I will give clarity. You can observe in everywhere I will writing net proceeds are market price. You don't consider which are is higher or lower ma. If both are there, consider market price. If individual is there, consider individual thing. Net proceeds is there, net proceeds. Market price is there, market price. Okay. When it come to redeemable debentures, how many payments we are paying ma? 2 payments we are paying every year. Interest at the end of the nth year. You can observe. This is called revenue expenditure. This is called capital expenditure. Revenue expenditure, capital expenditure. Why? Because when I am calculating two things, I am paying two transaction value. What are the two transaction value? Interest payment, capital payment. For calculating, I need to consider the two, na? But when come to the irredeemable, you can observe I consider only interest. Why? I am not repaying capital. So revenue expenditure calculation, capital expenditure calculation. Sir, in denominator, in irredeemable debenture, you consider either net proceeds or market price. Yes or no? No. But what you consider here? RV represent repayment value. Repayment value of what? Interest or capital? Repayment value of capital. It means for a denominator purpose, I have a two capitals. Repayment capital is there, net proceeds capital is there. That's why I am not considering both values. I am considering average value. Instead of individual value, which one give a clarity? Average value only. Instead of that only, I consider repayment capital plus net proceeds capital divided by 2 average value. That is the purpose of this denominator. Hope you understand. Why I am writing this formula means I am considering revenue expenditure, that is nothing but interest 1 minus tax. I am considering repayment value or net minus net proceeds or market price divided by n. I will give clarity for capital expenditure calculation also. But do you understand how I framed that formula? Revenue expenditure consideration, capital expenditure consideration as well. Investment, here two investment values is there. What are the two investment? Receiving investment value, paying investment value. Paying investment value, can I name this called repayment value or redemption value? Are you clear? Selling value or net proceeds both are same only, na? If I am selling, I received value called net proceeds. If I repay, there is a value called repayment value or redemption value. Clear? So I consider as an average. Now let us check with the this capital expenditure calculation. Example, net proceeds equals to 100 rupees, n years equals to 4 years, repayment value equals to 120 rupees. You can observe, for one security I sold for how much? 100 rupees. I sold for 100 rupees. But at the end of the 4th year I repaid how much? 120 rupees. Now when it comes to what is the calculation, repayment value minus net proceeds divided by 2 n gada. Now what about the repayment value? 120 minus net proceeds 100 divided by n 4. How much? Rupees. Every year you have to account capital expenditure 5 rupees. At the end of the 5th year, how much? 5 rupees. Now if they ask at the end of the first year, how much you can pay? 100 plus 5. If they ask a second year, you are accounting another 5 rupees. Now if you ask that second year, how much you will pay? 105 plus 5. How much? 110. For third year, you have to accounting 5 rupees. If they ask how much you will pay, 115. If they ask at fourth year, you need to account 5 rupees as a capital expenditure. 115 plus 5. How much? 1. Now see, for 4 years accounting this one. 5, 5, 5, 5. Now at the end of the fourth year, how much you are paying? At 0 period, how much you received? Clear? That is the purpose of the calculation. Now, what are the year you are calculating? You have to consider accounting of that capital expenditure. For accounting of capital expenditure, what is the formula? Repayment value minus net proceeds or market price divided by n number of years. Clear? For that year only, that calculation, accounting calculation. Clear? Now, what is the formula? Revenue expenditure plus capital expenditure divided by average. Now, what is the revenue expenditure? Interest 1 minus tax. What about the capital expenditure? Repayment value minus net proceeds divided by n number of years. For that n only for capital expenditure, not for revenue expenditure. Divided with n only for what? Capital expenditure. Why I consider average? Because in denominator I need to consider capital. I have two capitals. Received capital, paid capital. For confusing purpose, I consider average. Clear? Now, what is the difference between pre-tax and post-tax? Only one thing, that is called 1 minus tax. There is only one thing, that is called what? 1 minus tax. This is the important one, that's why I explained this one only. Clear? If you understand these two, same for KP also. There is no new learning things. Are you okay? Now here, tell me, what are the things you have to learn? I represent interest calculation, percentage on face value. Next, T represent tax rate. Given RV represent repayment or redemption value. Now it may be face value plus discount or face value plus premium or face value or face value minus discount or face value plus premium. In our example, face value plus premium. Why? Because face value 100, repayment at 120. Clear? Three things will be possible for repayment value calculation. Same, if they ask a KD calculation, write down the formula first. After that, in left corner or right corner, consider each and everything. First, what you want? I. Consider and calculate it. Next, what you want? T. They will you consider it. Next, what you want? RV, repayment value. So, for what is the repayment value calculation? Either they can repay at face value, they can repay at discount, they can repay at if they can repay at discount, what happen? Minus will happen. Minus plus. But 99% that calculation is not possible. Clear? Then okay, fine. Net proceeds. I hope you know. Issue price minus flotation cost. What is the issue price? You can issue at par, you can issue at discount, you can issue at premium. Minus flotation cost. Next, MP given. That's it. Denominator also what you want? RV plus NPR only, na? So, if you calculate this working notes, you can easily answer KD. Okay, write down. So debenture can issue discount par premium. 3 possible. Repayment also 3 possible. Face value, discount, premium. Another question ma. Flotation cost is related to repayment value. Flotation cost. Flotation cost is relating to repayment value or net proceeds. Why not to repayment value? Sir, I am paying capital, sir. No one is needed in between us. Common sense only. If no one is purchased, that's why I need a third party. For sir, net proceeds sales, sir. Repayment purchase. Simple. Understanding purpose. Are you okay? Completed? Problem number 2. I think this also relating to irredeemable. See, XYZ Limited keeps a perpetual fixed amount of debt. So perpetual means what kind of debenture it is? Irredeemable. There is no complexity. Directly interest 1 minus tax divided by net proceeds. Debt in the books, it pays a coupon of 15%. This is a percentage you have to apply on face value. It's a debt sells at par in the market. I said if you are procuring capital means sale only, selling your document. Now what is the cost of debt if the firm pays 35% tax? What is the cost of debt if sells at 5% premium, 5% discount to the, now where is the face value? Assumption. You can observe in the entire question, they, what are the numerical values? Interest rate is there, tax rate is there, a premium rate is there, discount rate is there. What about the face value? You have to take an assumption. The common assumption all are taking 100 rupees. Are you okay? Now this is not for exam, not for notes point of view, just you can calculate here itself. Basic version only. Now what about the KCM? KD equals to interest 1 minus tax divided by net proceeds or market price. Net proceeds. Why? Because discount is there, premium is there. Now when it come to interest, how to calculate? 15% of 100 rupees. Why? Because I am assuming face value equals to 100 rupees. 1 minus tax rate is given 0.35 divided by net proceeds. 5% premium means 105. Answer? 15 into 0.65 divided by 105 into 100. 15% of 100 how much? 15 rupees only na? Per debenture interest is 15 rupees. The meaning of 15 is what ma? Per debenture interest 15 rupees. Now the tax 0.35 tax rate. Now what is the net payment you have to pay ma? 0.65 divided by, generally net proceeds means face value, but in case A they mentioned 5% premium. 100 plus 5% 105. Answer ma? 9.28%. Ma, see the calculation ma. 9.75% is given here. Okay, it's a base version. Okay. I think they consider as a face value. They not asked that question. Hey, wait. Cool. What is the cost of debt if it sells? Yeah, you can observe. What is the cost of debt if the firm pays 35% tax? Here one question is there. Question number 1. Case A, question number 2. Case B, question number 3. Hidden question is there. Now see, cost of debt at the firm pays 35% tax rate. Up to that question mark, they not mentioned discount value, premium value. That's why par 100. Answer ma? 9 point. Are you clear now? Now what about the KCA ma? 15 into 0.65 divided by 105. Answer ma? 9 point. I think they consider round off with 25 ma. But it's not. 25 is not right one. 28 only is right one. Next case B ma. 15 into 0.65 divided by 95. Answer ma? 10.26. Ma clerical error ma this one. 28 only. Any complications ma? But you have to consider this question mark also ma. Student, what they will do ma? They will consider A answer, B answer only. But here 3 questions is there. Do you want in notes ma? Okay then. If you want, you can solve. Illustration number 3 ma. Illustration number 3. Rima and Co has issued a 12% debenture. What is the meaning for 12% ma? Interest rate. Just it's called interest rate, not KD. With calculation only you will get a KD. Face value 100. What about the 10 lakhs ma? Capital value. Can I find out number of debentures? How? Capital divided by 1 debenture value. 10 lakh divided by 100, you will get number of debentures. But number of debentures is not required. Clear? If you want, you can calculate in total point of view, 10 lakhs point of view. If you want, you can calculate per debenture face value point of view. Next ma, the debenture is expected to sold at 5% discount. Ma, what is this ma? Net proceeds information or repayment value information? Sold means what? Net proceeds. Net proceeds is alternate name, sale proceeds. Clear? Student will confuse here only ma. They will consider repayment value for net proceeds value for repayment value. Why? Because in this question, as per order they given. First net proceeds information only they given. But in questions they will give first repayment value. Then they will give net proceeds information. Based on sentence you have to decide which information it is. Now tell me which information that 5% discount? Net proceeds. It will also involve flotation cost of rupees. That's why you can take directly. You need not to apply percentage. Why? Because you are calculating per debenture point of view only. Na? Per debenture only they given. 5 per debenture. Next, the debenture are redeemable at premium of 5%. What about this 5%? Repayment value information. Now you can easily identify which kind of debenture it is. Redeemable debenture. Now 10 years. Calculate cost of debenture if tax rate is 50%. Problem number 3. Problem number 3. So can I write directly the formula? Now KD equals to interest 1 minus tax called revenue expenditure plus repayment value minus net proceeds or market price. But what information you have? Net proceeds. Then you can write only net proceeds. Net proceeds divided by N whole divided by repayment value plus net proceeds divided by 2. Generally, you have to write full names in the formula itself ma. If you are not write full formulas, why? Because space will not sufficient. That's why you have to write in a working note point of view, given point of view. Now see, I equals to interest. That equals to 12% on face value 100 rupees per debenture ma. Very clear na? If you want in a total point of view, you can apply 12% on 10 lakhs. Then you have to consider all total values. Now flotation cost also you have to consider total value. How you get total value? 5 per debenture into number of debenture, you will get a total flotation cost. Are you understand na? Interest percentage on face value, that is nothing but 12%. 12% of 100, 12 rupees. Next, what you want, ra? T. T represent tax rate. Given 0 point. The reason I am considering rupee values. If I consider 100 related values, I will consider directly percentage. I consider 1 rupee value, that's why rate is a preferable thing. Next, what you want, ra? RV. Redemption value. How to calculate this? Redemption 5% premium. The debentures are redeemable at premium of 5%. Face value plus 5% of face value. 100 plus 5, 105. Next, net proceeds. What's the calculation, ra? Face value minus discount, I think. Minus flotation cost also there. 3 things is there. Now what about the face value? 100 minus 5% of 100 minus 5. How much you will receive net, ra? You issued only at 95. On that 95, flotation cost 5 rupees. You net you receive 90 rupees. This is the way to you have to express. Now full forms also completed. Okay. Then insert in the formula, ra? Interest 12 rupees 1 minus 0.5 plus repayment value 105, net proceeds 90 divided by n. N is given na, you have to write n also, ra? N equals to number of years, that equals to 10 years, 10 divided by 105 plus 90 divided by 2. So please calculate revenue expenditure first, capital expenditure next, and average next. Step by step calculation. If you calculate all in one time, you will not get the answer. Now please tell me for next step. What about the revenue expenditure? 6. What about the capital expenditure? Plus only now. 1.5 divided by average 97.5. Now you can easily calculate. 6 plus 1.5, 7.5 divided by 97.5 into 100. 7.69 percentage. If you want to express in rate, 0.0769. Are you clear? Any doubts, ma? Sure. That's it about today, ma. Tomorrow we want to finish this concept of KP and KE. K is a larger. Okay, na? Okay. 5 minutes is there. I will finish KT. Concept number 2. Calculating cost of term loan or bank loan. That is nothing but KT. The difficult concept we have. This is the one. KT equals to interest 1 minus tax. That's it. Why? Why? Day 1 itself I said it. Only interest. Okay, that is one of the point. Only revenue expenditure only we are paying. At the end, we need not to pay capital. They will pay capital. That's why there is no concept of capital expenditure. Why there is no denominator? Why there is no denominator? Sir, bank loan, there is no number of debentures, there is no number of shares, there is no number of preference shares. Single document we will mortgage. Yes or no, na? That's why there is no concept of face value. There is no concept of discount. There is no concept of premium. There is no concept of flotation cost. That's why there is no denominator. You can use like this also, sir. Face value. What is the basic assumption for face value? 100 only, na? Clear? The concept of term loan calculation, just interest 1 minus tax. There is no denominator part. The reason for there is no denominator part, there is no number of securities. Only one document we will mortgage. There is no concept of face value, there is no concept of net proceeds, there is no concept of market price. That's why there is no denominator. For your convenience purpose, you can take the common sense. You need to consider face value 100 only. So if you want percentage, 100 into 100 also be get cancelled. You will get rate. So rate into 100, what you want? Percentage only, na? Are you okay? Don't confuse here, just direct calculation. So tomorrow, remaining 3 is pending, right? KP is pending, KE is pending, KR is pending. KE is a huge discussion, but easy. KR, less discussion, somewhat confusing points. KP is nothing but KD. KP is nothing but KD. Few changes is there, I will explain. Are you okay now? Okay then, take a leave.